Okay, good morning. The room is open and hopefully everybody is in it. Thank you everyone for joining us. Welcome to the latest Duke Media briefing on the COVID-19 pandemic and its effects on society. I'm Gregory Phillips with Duke Communications and I'll be moderating this panel. We have three Duke scholars with us today to discuss the pandemic's effect on global energy demand and what that means for the future of the energy industry and the global environment. I'll introduce them in turn to get the discussion going and then we'll open it up to questions. We are recording this briefing and that recording will be sent to everyone who registered. Thanks to those reporters who already submitted questions. During the discussion, those of you joining us on Zoom can also ask questions via the Q&A window, and there'll be an opportunity to ask questions out loud in a few minutes. So we'll go ahead and get started, and I'll introduce our panel. With us today, we have Drew Shindell. He is a professor of earth science who researches how climate emissions and air pollution affect human health and food security. And he was the lead author on the UN's 2018 Intergovernmental Panel on Climate Change report. Drew, good morning.
Morning.
We also have Kate Konschnik. She is director of the Climate and Energy Program at Duke's Nicholas Institute for Environmental Policy Solutions. She specializes in the Clean Air Act and has worked with state governments on climate and energy policy. Kate, good morning to you.
Good morning.
And Brian Murray is director of the Duke University Energy Initiative. He specializes in designing economic policies to address environmental problems with a particular focus on climate change policy. And Professor Murray, good morning. And I'd like to start with you. What could the drop in energy demand mean long-term for the fossil fuel industry and the push towards renewable energy?
Well, good morning, Greg, and thanks very much. So let's first focus on oil. Where the daily consumption has dropped around 30% and prices have plummeted more than half. And then let's also, for the purposes of this discussion, focus on the US as the world's largest producer of oil. So there are two types of oil production. One is called conventional and the other is unconventional. Conventional production requires vertically drilling into large seams of oil using essentially the same methods for the last 100 years. This is a relatively cheap way to produce oil and is still the dominant source in places like Saudi Arabia and Russia. For unconventional oil, we talk about deep sea drilling or oil sands in places like Alberta and Canada, but also importantly for the United States, shale production, which has been enabled in the last 10 to 15 years by a combination of hydraulic fracturing and horizontal drilling, which has made the US a global leader in oil production. By and large, unconventional production is more expensive, and therefore it's more susceptible to demand and price drops like we have seen. Another thing to keep in mind is there's different forms of ownership of oil assets globally. A little more than half of the world's oil production is produced by state-owned enterprises in places like companies like Saudi Aramco and Rosneft. And only about 15% is produced by the large multinationals like ExxonMobil, Shell, and BP. And the rest is produced by small and mid-sized independent producers. So the US position is strong in shale and heavy in independent producers, companies like EOG, Pioneer, and Devon. It's also worth noting that before the pandemic, these US independent shale producers were getting squeezed hard by Wall Street due to a lack of cash flow generation over the last decade or so. Okay, so with that as background, how does the pandemic change things? So we're now witnessing the largest demand destruction ever seen. I mentioned earlier about a 30% reduction in daily consumption of oil. And this has caused the oil prices to plummet. It's a global market and this affects the highest cost producers in the world the most. Shale in relative terms is a higher cost producer. It's cheaper than how we used to produce oil in the United States, but compared to other places in the world, it's a little bit more expensive. So it's hard to see much but bloodshed in the US oil patch and many other high cost operations throughout the world. Now, one question you asked is, will this accelerate the adoption of renewables? And that's a mixed story. What's favorable for renewables in this environment is that investment capital is looking for more steady returns. The volatility of commodity markets is really spooking them, and renewable energy is a good alternative, especially as the costs and the reliability of renewable assets like wind and solar and the energy storage that allows them to be integrated into the grid have improved remarkably over time. What's unfavorable on the renewables front is natural gas is really cheap. And so when we talk about renewables, we're primarily talking about electricity production, and the other sort of major source of electricity production in the United States is natural gas units. So another thing that is somewhat unfavorable for renewables is that these large multinationals and state enterprises in the oil sectors that I alluded to earlier they were making big investments in renewables, in the billions of dollars. So what's going to happen to that? Well, some are saying they're going to continue. So the CEO of BP, Bernard Looney, famously said a couple of weeks ago, they're still well committed. And in fact, perhaps even more committed because of the stability of returns that I talked about. But a real question is, with what cash are they going to be able to invest? Now, you asked about renewables, and we talk about renewables, but real quickly, we can think about electric vehicles as well as having an impact. And so whether or not they're fueled by renewable energy or other forms of energy, they're sort of seen as a decarbonizing alternative. So low gasoline prices are going to make the decision to drive electric vehicles a little bit less favorable, but the policy and improvements in quality will probably drive the market over time. So that's my brief summary on your question.
Gotcha. Thank you. There's a lot to dig into there, and we're certainly going to come back to it. But right now, I'd like to move on to Professor Konschnik. Can you tell us, what do policymakers and the public need to understand about how the pandemic is affecting energy usage and what that could mean for the future?
Yeah, thank you, Greg, and good morning, everyone. Thanks for joining us. I think the most important thing for policymakers and the public to realize is how much we don't yet understand. We're seeing major divergence from our normal transportation and energy use patterns, or normal being the last few years, similar time accounting for temperature. But what we don't know is whether those trends will stick, whether they'll deepen, or whether they'll reverse course. And so there's just a lot of uncertainty. Any of the reporters here who are covering COVID know there's uncertainty generally about all the medical variables that are just unknown at this point. And so any of the debates you're seeing about a U-shaped recovery or a V-shaped recovery, I honestly think we're looking more at a W-shaped recovery at this point, or cosine wave. We're going to have some ups and downs going forward. All of that has huge implications for how we use energy and how we use transportation. I think given this uncertainty, I would suggest three approaches. One is that it's really important for us to be tracking the data. So we're seeing at a big level about a 6% drop off of electricity use in the United States. But when and where electricity is being used is the bigger story. So region to region, hour to hour, we're seeing different demand peaks. We're seeing different sectors drawing more or less electricity than usual. And that has huge implications for the resilience of our grid, for the amount of excess electricity we need above peak demands going forward. And so it's something worth watching. It's also interesting to see, I would say we need to be tracking those policies, tracking those trends, and then forging policies that would deepen the sort of good story we could maybe glean out of this, the sort of emissions reducing activities, while at the same time figuring out how to get America back on its feet. I think if you ask a lot of Americans, you tell them we've dropped, our CO2 emissions 11% over last year, and they say, I'm trapped in my house and I'm unemployed. So if this is what we need to do to tackle climate change, no, thank you. That is a very real risk going forward. And I think we need to figure out how to take what we're learning about the fact that people maybe don't need to fly as much, that people can do some work by telecommuting. We need to track the data and make sure that telecommuting actually does result in lower emissions. It certainly results in lower transportation emissions, but less clear on the home heating and air conditioning. It may be more efficient to heat or cool a collective work area. But if we find out that information, that the evidence bears out that it is emission reducing to telecommute, and we can do that with certain jobs and get people back to work, we should be doing that. The third thing, after tracking data and then forging policies to dig deeper and kind of move further on those emission reducing trends, would be that we need to look at our institutions, both public and private, and figure out how to make them more resilient and adaptive. Those are becoming buzzwords, but there's a lot of really hard work behind those buzzwords. And whether it's a Russian-Saudi oil price war or a pandemic or severe weather, we're getting hit with a lot of external shocks to our energy system, and we need to be more adaptive. So thinking about how to plan for uncertainty and to hedge our bets going forward will be really important.
Gotcha. Thank you so much. And again, lots to dig into there that we're going to come back to. But I would like to move on to Professor Schindel. Now, we've talked about, we don't know what the future holds, but we know that there's been this sudden drop in demand. How much of a difference is that drop in energy demand making to air quality? And can it make any kind of a dent in global warming?
Thank you, Greg, and good morning to everybody who's joined us. So the drop in energy demand is making a substantial difference to emissions of all of the things that affect air quality and climate change. The difference there, the interesting thing about this is that air quality responds very, very quickly. Almost all of the things that we breathe in that are bad for us or bad for plants and such don't last very long in the atmosphere. So as we change the emissions over the course of weeks, days, months, any of these timescales, we see a response very quickly. And I think most of the public can see that. I know, I go running around Durham, North Carolina, and I can feel the difference in my breathing. So I can only imagine what it feels like, if you live in Delhi or you live in Shanghai, right, where the huge, huge increases in air quality. So these things I think are very profound. I think they might go to the issues that Professor Konschnik was just talking about, is what people think about going forward. I don't want to make this trade-off of living in a quarantine society for the sake of climate change. Hey, but I really like this clean air. Isn't there a way to get back to having a full economy without having polluted air? I think there is a profound difference. I think we will be able to see that in human health. We are starting to look at things like that. And, as people breathe less pollution, fewer people go to the hospital. So we're seeing people go to the hospital for COVID, but fewer people go to the hospital for respiratory problems and such related to air pollution. So there's some really interesting medical questions going on. For the sake of climate, the pollution, primarily carbon dioxide, lasts for a very long time in the atmosphere, and the climate response is very slow. So at present, we're seeing drops, as we've heard a little bit already, on the order of 5 to 10% in CO2 emissions from different sectors. But so far, those have persisted for on the order of a couple months. When you average across a year, this is going to lead, if we recover relatively soon and go back to kind of normal, this will lead to drops that are only a few percent in annual emissions, which will be virtually unnoticeable in terms of long-term climate. So the real question is what happens going forward? Do we decide that, hey, telecommuting works and we like having not so many cars clogging up our downtown streets and let's make this the new normal? Or do we decide that, hey, the economy is in really bad shape. What we have to do is pour money into tried and true things like propping up fossil fuel industries and the traditional way of doing things. Right? So I think what we're really going to be looking for is how do governments respond post-pandemic? Do we kind of build back better and get a new society where we put people to work doing things that can help the environment over the long term, retrofitting buildings, installing solar panels, installing EV chargers, all of these 20 million people that just lost jobs in the US, they need something to do. Do we put them to work in those kind of industries, or do we go back to the old-fashioned way? So I think there's a lot of interesting things to think about.
Absolutely. And thank you very much to all three of our panelists for those opening answers. We've got a lot to dig into here. I would remind reporters on the call that you can ask a question through the Q&A function in Zoom. And you can also raise your hand through Zoom if you would like to ask a question. And if you are joining us, if you happen to be joining us via a cell phone or a phone, you can press *9 to raise your hand so that we can unmute you to ask a question. And while reporters are in the process of doing that, we already do have a couple of questions. And one question, Professor Schindel, is a direct follow-up to what you were just saying. Somebody wanted to know what accounts for the biggest drop in CO2 emissions as demand drops? Is it through less cars on the road? Is it through air traffic? Or can we categorize it as shipping, versus versus commuting, or is that even a distinction we can make? Is there anything you can say about that?
Yes, thank you. So we have just started to compile the initial data on how much the drop in CO2 emissions can be attributed to all the different sectors. And what we see are the largest percentage drops in things like shipping and aviation. But those are in general smaller sectors, for smaller contributors to global emissions worldwide. So in terms of the total tons of CO2 coming out into the world, the largest drops are from industry, from the decline in industrial production and manufacturing, and from transportation, primarily motor vehicles at the surface. We're seeing smaller declines in energy because, of course, there's less demand from industry, but more demand from residences as people are home. So the biggest two right now are industry and vehicles, and so that going to the future, we expect industry to largely return. We're already seeing signs of that in some places, like in China. It's still a big unknown what will happen with transportation, and if we'll go back to the same kind of demand and usage patterns and commuting patterns that we had in the past.
Gotcha, thank you. We also have a question from a reporter in the chat, and I'm not sure who will be best placed to answer this. It's about nuclear energy, so I'm going to throw it out there and then see who would like to tackle it. So Jack Eigelman from Carolina Public Press asks, what are your views on the safety of nuclear power during the pandemic, given concerns about staffing levels to transport spent fuel, security at facilities, and ensuring there are healthy staff with the correct expertise during regular operation and the ability to respond to an emergency? So has the pandemic caused any safety issues with nuclear energy? And is there anybody on our panel that can shed any light on that?
Kate, do you want to take that one on?
Thanks, Brian. Thanks, Brian.
No, I mean, I'd be happy. I just, I think with the utility sector and electricity, I thought we'd.
Yeah, no, absolutely. Great question. So I think from the outside, we have not seen any safety concerns yet. I know that this is top priority for the electric utilities that own nuclear plants. I've spoken to two of those companies, and that's the first thing they want to talk about is the people who are literally living inside the nuclear reactors right now and unlikely to see their families for weeks, if not months, because they have to live there and make sure that everything remains within safe parameters. Beyond that, though, I feel like I couldn't speak to what's actually happening inside those reactors or the transportation of spent fuel question that you posed.
Yeah, I think, what I would add to what Kate said, I think this is actually just the kind of thing that utilities are really good at and have been for a long period of time, which is keeping the electrons flowing, right? So there's been some criticism of the utilities in the last few years, whether they've been sort of slow to react to social desires for more renewable energy or something like that. But in terms of keeping plants running, they're really good at this. And they've had pandemic plans in place for a long period of time, and they were just executing on this as they had planned. They didn't know what kind of pandemic it might be, but they knew that they would likely be in situations where they were going to have to, as Kate alluded to, have some of their staff essentially living at the facility in order to keep things flowing. People have said that the only thing that stands between us and the Stone Ages these days is our electric power system and reliable Wi-Fi. And so I think they have taken this role very seriously, and they have performed admirably in terms of keeping the system running. It will be interesting to see in the summer as the demands for electricity change as we get hotter in the northern hemisphere, how that will be met. But it's also going to change the daily profile of electricity use because as people stay at home, it kind of shifts when our peak load is delivered during the day.
Thank you both very much for that. We actually have a follow-up question related to energy demand in the summer. If, as it seems to be the case, many people will be continuing to telecommute and work at home through the summer, given that that's likely to prompt an increase in home energy usage as people are cooling their homes, would that cause a greater spike in energy demand than, for example, if workplaces were being cooled, as maybe they will continue to be, and would that create a spike in demand that could be problematic for energy suppliers?
Actually, I see it the other way around. I mean, normally under normal circumstances, you see these big spikes in the afternoon, like in the summer when air conditioning kicks on. You see these big spikes in the afternoon as people move from their sort of controlled work environment where it's more of a steady flow to their homes where their AC kicks in. And if people are going to be working at home throughout the day, I think there'll be less spiking. There will obviously is going to be a shift in load from commercial and industrial facilities to residential facilities, but I think it's going to actually even things out. I think Kate or Drew may have a different perspective on that. But.
Yeah, well, I think we have some data already just based on Florida, and the Energy Information Administration just put out an interesting data set on this, showing that, you know, what Brian was alluding to, we have sort of total electricity use, and then we have demand at given points of the day. And as I think I had mentioned earlier, you know, we sort of in a normal time see these spikes in the morning when a lot of people are getting ready for work or school, and then when they get home at the end of the day, that can be exacerbated in the summer and the late afternoon, as Brian is noting. But we're already seeing in Florida the shift to residential electricity. Residential electricity demand is already more than half of electricity demand in Florida, which is quite high, higher than the national average. And the temperatures that required people to start air conditioning their homes, we are not seeing overall electricity demand go down in Florida as we've seen in other parts of the country, and we're not seeing these spikes. So it's looking like there is sustained increased across the day electricity use in the residential buildings, which could, you know, sort of show where the rest of the country, as temperatures rise, is heading. Certainly it's exacerbated in Florida because they don't have a lot of heavy industry and they have a big residential footprint. But we could see an increase, certainly, as Brian said, a shift from commercial spaces to residential spaces being air conditioned in the summer. And in some parts of the country, particularly where we have a big residential footprint, that could go against this general trend of a drop in electricity usage.
Gotcha. Thank you both very much for that. Professor Schindel, we have a question in the Q&A that I believe is directed to you. And the question is from Justine May Calmer. Thank you very much for the question. And it's, what sectors are not seeing a drop in CO2 emissions? Are emissions growing in any areas?
Yeah, well, thank you. That's a good question. So are CO2 emissions growing anywhere? And, you know, we just follow up on what we were just talking about, you know, I think that may be the case locally, say, what we were just hearing, residential usage of electricity in Florida is not decreasing. At the global scale, we are not seeing increases in any individual sectors, but residential is again the sort of odd man out amongst the others, and that the others show some pretty substantial declines, and residential shows only a very modest downward trend. And so some places, you know, air conditioning is not so prevalent. It'll be a little bit different than the US, but in terms of worldwide, so far, I would say residential is nearly flat, and electricity use or power generation more broadly, which is the bulk of that is electricity, is only modestly down. So again, I think we're seeing a drop in demand from industrial and office facilities and an increase in residential demand, which is keeping the overall power generation sector very modestly changed. So again, not increasing, but power and residential, we've seen very modest declines so far.
Gotcha. Thank you very much. A follow-up question for you, Professor Schindel, not necessarily related exactly to that last question, but obviously most governments across the world for years now have acknowledged the need to do something drastic to address climate change. How much of an opportunity does the current situation in terms of changing our trajectory as it relates to energy use or CO2 production and global warming? Is there an opportunity embedded in the current struggle?
Yes, that's a great question, Greg. So thank you. I would say there is a great deal of opportunity, because one of the things we've seen. Let me start again a little bit. Oh, we've seen difficulties, very pronounced difficulty in getting action put into place around the world, both because the public perceives this as kind of a diffuse and future threat rather than something that's here and now and tangible. And we've seen difficulty in getting the initial capital that is needed sometimes to invest in things like charging infrastructure, which is necessary to have the infrastructure before people switch to electric vehicles. And, it's this kind of traditional chicken and egg problem. What we're seeing with this pandemic is people can really see the air around them cleaner. They're seeing that when we make a change, we can have an immediate impact on the environment, and a profound impact on the environment. And obviously we don't want to deal with climate change by everybody up at home. But I think that there's a chance that the public will to live in a clean environment, is enhanced because they're seeing what can happen when we get rid of pollution. At the same time, we're also seeing that all of these arguments about, well, we can't really afford to all the initial investments for electric vehicles, charging infrastructure, and putting solar panels on all these people's homes. And, even if all these things pay for themselves over a few years, we don't have the money to spend. Well, it turns out when we want to spend money, we do have plenty of money to spend, and we can come up with trillions of dollars when we decide that we need to do that. And so given how many millions of people are out of work and how much work there is to be done that are fairly non-specialized, low-skilled jobs that can be given out to millions and millions of people, that would aid the energy transition to a low carbon green economy, there's a real opportunity there for us to speed this transition right as part of the response to the pandemic. And I think we're seeing a profound push to do that in Europe. We're seeing that coming up in some of the planning in the States. We're not currently seeing that in the administration. We're seeing talk of that in Congress, and it's unclear, how this will go. But certainly at the state level, I think there's an awful lot of room for what we talk about in the community sometimes is building back better and putting people back to work and using the stimulus money to get the economy going while preserving these things that we see we really have the power to change, like cleaning up our environment.
Gotcha. Thank you.
If I can, I'd like to add some things that I think Drew makes some really good points there. I wanted to add a couple of other sort of dimensions to that. One is you need to keep in mind that if we're focusing on, say, energy decarbonization, we start out with the energy system that we have right now, which is, sort of largely a private enterprise. And so if you think back to the last Great Recession and the last decade, or 2008, 2009, there was a lot of momentum in the United States and other countries for serious action on climate change. There was going to be a cap on emissions, 80% by mid-century. And, frankly, the economic crisis really kind of threw cold water on that from a political standpoint. A lot of those more aggressive actions sort of took a back seat as we addressed some other serious problems in society. And so there's some concern by people who work in this space that this could repeat itself again. Okay, but there's a couple of other reasons for optimism. One is that we're actually 12 years later. So a lot of the technologies that were nascent at the time are well accepted right now. So I alluded to in my comments earlier about the cost of renewables, and they have come down. And so now they operate on par with fossil energy in a lot of sectors. So that's there. That toothpaste is not going to go back in the tube, and that's there. The other thing to keep in mind is that during some of our most significant economic disruptions of the last 100 years, meaning the Great Depression in the early 20th century and the Great Recession last period, we saw tremendous technological innovation actually come out. I mean, there was a lot of destruction that went on in the economy, and often when the capital was redeployed, it came into sort of novel ways. And so in the last recession, we saw things like Uber and Airbnb, like the gig economy sort of came out of there, and there was a lot of innovation. And so I think there's still ample room for a lot of innovation in the energy sector, in our decarbonization movement right now that could come out of this. It's going to be hard to forecast what that might look like, but that could, I think that's just another perspective to have on this.
Yeah, and it's a great question, and I loved hearing the answers, and I feel like we could talk just about this question all day. When I was talking about sort of the three things that I was thinking about coming into this, and the third being that we need more adaptive regulation and sort of thinking about systems that are more resilient. I do think there are some lessons to be learned here. There are the clear connections between COVID and the stay-at-home orders and the economic downturn and climate, but there's also just parallel lessons to be learned that we're sort of reacting to a lot of these crises. We get behind the 8 ball. It ends up it's more expensive than had we laid the groundwork and been watching for this and been more vigilant and had gotten ahead of it. And I think that there's some no regrets policies that we could be thinking about in the climate space, the energy space, about, when we're building that next megawatt, why not build the next megawatt that's good for air quality? If we're going to have catastrophic climate change, this would be something that could help forestall that, and it puts people back to work. So starting to think about how do we plan for that next pandemic, that next crisis that we can't define or predict right now. And I think that sort of future proofing and thinking about systems that will be able to withstand any of these shocks would be a good way to go.
Absolutely. Thank you, all three of you, for weighing in on that question. We have a follow-up question for a point that Professor Schindel made. Can you point to a few examples of states or countries that are creating green jobs to boost the economy and help the environment, as you mentioned a few moments ago?
Sorry, was that to me? My sound cut out for a moment. I apologize.
Yeah, not a problem at all. The follow-up question was asking if you can point to any examples of states or countries that have created or creating green jobs to boost the economy and help the environment, as you mentioned a few moments ago.
So I am aware only at this stage of discussions of how to do that. For example, within the European Union, as part of their Green Deal, I believe they call it, like ours, but without the new in it. Maybe the other panelists will know something about that. But what I am seeing are policies that relate to coming back and are changing lifestyles in a way that is environmentally friendly. And one of the things, it's not particularly a jobs program, but trying to get social distancing and allowing restaurants to open and allowing people to move safely around big cities, as we're seeing the reclamation of street space and sidewalks. Sidewalks for restaurants and street space for pedestrians and bicycles, so that people can stay far apart and get around on their own without taking public transportation, which can be very crowded, and taking space that had been dedicated to automobiles. And that's tangentially related, but it implies that we've seen this in Milan and Paris and London and a little bit in New York and in the United States. And so we're seeing some of this idea of changing society in a way that both deals with the new reality of social distancing and keeps some of the environmental gains by, in particular, reducing exposure to air pollution from motor vehicles. So I'd be interested to know if either of my colleagues here have seen things more specifically related to jobs.
I guess I would look at it in, maybe less of the have been sort of top-down policies set at a national level that have been, allocated money to create green jobs, and thinking more about the sort of the connection between policies that have been put in place and then the jobs that have sort of followed as a result of that. And so when we look at over the last decade to 15 years, there have been sort of decarbonization policies put in place at state level and even at the national level in the United States. And what that has meant is that there has been a need for the development of technologies and services to meet those green targets in ways that employ people. So for instance, state of California has very aggressive carbon targets for the state, and it also uncoincidentally is sort of the leading state in terms of green tech development and employment. At Duke, a lot of our students who come through here and study energy in the old days used to maybe go work in the oil and gas sector, utility sector. They still are often working in the utility sector, and some are still working in oil and gas, but many are working in the renewable space, in the energy efficiency space, in the technology space that has been kind of driven by policy demands to produce lower carbon energy. So job creation that way has been kind of the consequence of top-down action through the policy process more so than through the budget allocation process to create new jobs in new sectors.
Gotcha. Thank you very much. Professor Konschnik, just wanted to give you a chance to weigh in on that if you had anything additional.
No, I'll let my two colleagues answer that.
Gotcha. Thank you very much. Well, we have more questions in the Q&A, so I will move on to those, and I'll remind everybody on the call that you can submit a question through the Q&A function in Zoom, or you can raise your hand through Zoom, or if you are on a cell phone, you can use *9 to raise your hand so we can unmute you so you can ask a question. We have a question here in the chat from Matthew Diazio, and he asks, as businesses, especially heavy industry, start to reopen, is there a chance we'll see worse than usual emissions for a time if it requires utilities to use sources with faster response times? Professor Schindel, or I'm not sure which panelist would be best placed to answer that, but if anybody has any perspective, then please weigh in.
Well, I can begin, and maybe others can chime in as needed. I don't see necessarily faster response times being the key issue, because the industrial demand, it tends to be spread out over time, and as these industries resume, which they already are in places like China, they don't have as many orders, but they are up and running again. So we're seeing the demand increase, but it's kind of bringing back the old patterns of demand, throughout long periods of time. And I don't believe requires much of a change in the energy mix, but this kind of rush to build back the economy at all costs, the one way it could lead to even worse emissions than we had before is by the kind of things that we're seeing a little bit in the United States at the federal level, is saying the economy is paramount and trumps everything else, and so therefore we should even roll back environmental regulations. And the EPA making announcements about not bothering to enforce regulations if companies can make a claim that whatever they need to waive them for the sake of COVID recovery. So I think there is a chance that we go the opposite direction. We've been talking about all the opportunities presented to kind of build back a better and more environmentally friendly economy. There is the chance that we build back a less environmentally friendly economy if we kind of take the opportunity to make profound changes and we push instead in the other direction and say that, well, the most profound changes we need to make are to roll back regulations.
Gotcha.
Thank you very much.
One thing I just wanted to add, I completely agree with everything Professor Schindel said. But on the faster response times, I think it's worth noting that some of the electric generating units that are the slowest to turn on and get ready to meet demand are coal units. And they are already being pretty hammered by this downturn and by, I think, the really low natural gas prices, even lower than we've been seeing in previous years. So coal use was, I think it made up about a quarter of our generation this time last year, and it's about 15 or 16% this year. So a pretty steep drop. And so if there were some sort of roaring back that required quick response times. And I agree with Professor Schindel, that's not really the nature of industrial energy demand, that all of a sudden unexpectedly they would need something to turn on. Their shifts are pretty standard. They tend to be pretty steady load. But if we, on top of the hammering that coal is already getting, if there was some increased recognition of the value of fast start or black start resources or quick start resources in the market, the most carbon intensive electric generating facilities would be hurt by that.
Gotcha, thank you.
I think I would only add to the fact that I think it's important to recognize the role the electric power generation plays in US emissions and how that's changed over time. And there's been about a 20% drop in greenhouse gas emissions from the electric power sector. And so it's a smaller source than transportation and industrial uses now. And as both my colleagues suggested, this is a relatively small part of the emissions profile of the electric utility sector. So it's likely to be swamped by what else is going on in the electric utility sector, as well as the emissions that are in the other sectors. As we ramp up the transportation, as we alluded to earlier, will be coming back as well.
Gotcha. Thank you, all three of you, for your answer there. We have another question, a rather blunt one. Not sure who would be best placed to tackle it. Is this, as has been predicted in some places, a death knell for fracking in the US? And by this, I guess, we're talking about the drop in energy demand, the current situation vis-a-vis the pandemic.
I guess I'll take that on. So when we think about fracking, so I referred to shale resources earlier in my comments on the oil and sector, and then I didn't really talk so much about natural gas, but actually probably it's had a more important effect in the natural gas sector. So hydraulic fracturing combined with horizontal drilling has really been the breakthrough that has made these resources accessible. In the oil market, the combination, so, it's been argued more, that sounds actually lighter than it actually is. A big move of the Russians and the Saudis in the last several months has actually been to depress prices to put pressure on US shale producers, because US shale producers have really taken over the market in many ways over the last 5 years in particular. Again, as I mentioned earlier, the US is now the largest producer of oil globally. And so much of the US production comes from shale that if you push the prices down, you really run a strong possibility of large bankruptcies, say in the US shale sector. And that's already started. One of the largest US shale producers is teetering on the edge of bankruptcy right now. And this is having a tremendous amount of pressure on them, as well as the pressure from the investment community, from Wall Street, who has, after a decade of less than satisfactory returns on shale investment, because even though the volume has gone up, the prices have gone down so much to make it less profitable. All of these things are combining to put a tremendous amount of pressure on hydraulic fracturing in the US. Is it the death knell? I don't think so. I don't think it's going to lead to the elimination of hydraulic fracturing. I do think that it's going to have a significant impact on the volume that comes out of it, at least for several years.
Gotcha. Thank you very much. We have another question in the Q&A from Jack Eigelman with Carolina Public Press. Any thoughts on deregulating electricity markets for power in states such as North Carolina? Would this potentially open the door to more competition from solar and wind and so on?
I can take a shot at that. Is the question related to COVID or just sort of generally talking about electricity deregulation?
Well, I mean, that's the only context I have with the question. So I'm reading between the lines. I guess my sense is, does this provide an opportunity to deregulate electricity markets to allow for competition from solar and wind, or is that something that states should be considering?
Yeah, so before COVID-19 hit our shores, this was an active debate in both of the Carolinas. So we've had in both state legislatures in the last couple of years study bills working their way through that would require the utility commissions to be studying the idea of our major investor-owned utilities to enter competitive wholesale market or to create their own in the region. there is precedent for trying to create one in the region. The Carolinas had put together a proposal for the Federal Energy Regulatory Commission back in 2000 and had that provisionally approved. There was concerns at the federal level that it was not big enough and that Duke Energy at the time might have too much influence, too much market power because of it being geographically limited. And then the California energy crisis happened and the Carolinas lost their appetite for this type of arrangement. And here we are 20 years later having the conversation again. Whether it would increase competition for renewables, penetration of renewables in our service territory is really an open question. So we've had in North Carolina some pretty aggressive avoided cost rates for requiring Duke to purchase small renewable energy production. And so that's why we've got the #2 most installed solar of any state in the United States after only California. That changed a couple of years ago and the legislature sort of pulled that back a little bit, but then required competitive procurement of solar. That program has subscribed very quickly. There are some concerns with producers and Duke about interconnection and how long it takes and how much it costs, but we are seeing some of that sort of competition on the margins. I think the big questions for the Carolinas are, I think there are a lot of big energy consumers in the Southeast who would like to be able to go to market and buy renewables directly and not have to go through an investor-owned utility. And so I think they see this deregulation or participation in a wholesale market as a way of getting more renewables and on their terms and on their contract lengths. So I think it could be a win for a lot of the big consumers. There's a very big question though about what it does for all the other consumers, those of us who don't go and purchase our own utility scale solar farm or all the power from it. And given that some of the competitive markets that neighbor us, like PJM, that the concerns that, you know, the political food fights that have been happening there, particularly in the required capacity markets, about what kinds of resources get to play in that market and whether if a state subsidizes clean energy in some way, whether that price needs to be, you know, whether you're not allowed to consider those subsidies when you're thinking about the cost when you're bidding competitively. There's a very real question about whether renewables are being shut out of those markets. And so I think it's an open question, but I think that's why there is a big push. And I think even Duke in at least one of the Carolinas has agreed that a study might make sense.
Gotcha. Thank you very much for that. We haven't had any more questions in the Q&A, so we're going to move towards wrapping this up. One thing that I would like to ask you all before we end this briefing is that obviously, you know, this is the pandemic is a huge moment. It's changing everything. But within your areas of research, I'm wondering if what the first thing is that you would like to see happen as a result of the situation that we're in. Obviously, there are lots of things that could happen, lots of things that need to happen. But what's the first thing that you would like to see, whether it's policymakers or whether it's industry or the population as a whole, one thing that you would like to see happen as soon as possible as a result of this current moment?
I'll go first since I'm on camera still. I would like to see that if there is another stimulus package coming out of Capitol Hill, and based on what just came out on the House side, my wishful thinking may not come to fruition, but I would like to see real investment in clean transportation, clean energy infrastructure. I think if we are going to be infusing a lot of capital into the economy to get it started again, we should be investing in the technologies of tomorrow and in technologies that are good for the environment and good for the economy.
Well, I think Kate's answer captures a lot of my initial instincts as well. I think if I'm going to talk about a specific policy action that could be taken, is one that probably should have been taken a long time ago, which is to put a price on carbon. And putting a price on carbon will drive a lot of these low carbon investments. It'll provide the proper price signal. But now that we are as fiscally constrained as imaginable, I mean, just last month, we increased the US deficit $500 billion in terms of how much we spent versus how much we brought in. So we'll be looking for revenue sources, and this there's been wide agreement amongst economists and other experts out there that a price on carbon, it doesn't have to be the only thing and shouldn't be the only thing that we do, but it would be an important element of any approach to decarbonize our economy would be to have the price signal and then also the revenue generating source that will be needed to get us out of this fiscal mess.
Well, I would just say that as far as policies, I think my colleagues have elaborated on two excellent ones. So I will go to a different area and say that what I would really like is a general kind of public citizens view as a lesson from this. And the lesson would be that when scientists spend a lot of time and effort really studying a problem and coming up with some information to tell society about risk, that something is coming and it will be cheaper to plan for it and deal with it before it gets bad rather than waiting for it to happen, which is what we've been saying with climate change for decades now, that people will say, hey, you know, we probably should have listened to the scientists about COVID, and maybe we should start listening to them in general when they're telling us how to avoid these kind of risks. So we have, you know, very fast disaster like COVID, which goes from nothing to changing the world in a couple of months. And then we have a very slow moving disaster of climate change. But if we don't sort of get our heads around the reality that the science is very clear on this, and it needs to be a priority to deal with it before it's even more disastrous than it is now, then, you know, I think we'll all come out with much worse catastrophic consequences than we're seeing with COVID. So I hope that can become part of the general discussion in America.
Thank you, Professor Schindel, and thank you to all of our panelists for those thoughtful responses. We're going to wrap it up there with no more questions in the Q&A. So thank you, everybody who joined us on the call. Thanks again to our panelists, Drew Schindel, Kate Konschnik, and Brian Murray. Thanks again to reporters for joining us. Our next briefing is scheduled for May 20th. If you'd like to be included on the advisory for that event, please email dukenews@duke.edu. In the meantime, thank you, everybody, and please stay well. Have a great day.
Thank you.
Thank you.